So, how are you feeling? Are you at war? Are we going into battle? Well, no, of course not. Now, for a while, it looked like we'd ridden the worst of it last week, but then, well, the bears, they bit hard again as the cryptocurrency market dropped back from sort of where it had been, around 3 trillion back in November, to 1.7 trillion again. Now, here's the thing. They don't care about crypto, those guys. They just do their jobs. It's wonderful. So these periods, they never feel good, but in this quick take, we're gonna go over 3 reasons why this has happened and what we can do while the market is scared. All of that coming up. Now, who does this belong to? This thing's cool, man. Can we buy it? Not right now, we can't. Crypto.
In 2021, Ethereum traders lost over $200 million to malicious bots exploiting their trades. As DeFi continues to gain popularity, this number is expected to rise. Eden Network is a next-generation private transaction service for Ethereum, providing traders with MEV protection by submitting transactions directly to miners and away from the prying eyes of harmful bots. Using Eden Network for Ethereum transactions results in better and safer trades. Eden Network recently launched Eden Rocket RPC, which compiles some of Ethereum's fastest private transaction networks, resulting in 90% plus effective hash rate. This makes Eden Rocket RPC the fastest private transaction network available, protecting you from bots. Join the best and get started with Eden Network today and trade safer.
The funny thing is, look around, the weather is nicer than it has ever been. It is just a beautiful, beautiful day to be sitting outside and thinking about things that are not crypto related, that are not market related. But that's not why you're watching this video, is it? You want some reasons, so let's get into it. Reason number 1, the Fed. This is the big one, really. Now, all eyes were on the FOMC this week as they announced the heavily anticipated interest rate hike. 50 basis points, or half a percentage point. Now, half a percentage point doesn't sound like much, but consider this. This was the largest in 20 years, designed to combat rapid inflation, which is now at 8.5%, which, let's remember, hit the turbo boosters because of, well, anybody remember COVID? Gosh, 2 years of pandemic, but we've completely forgotten about it. In his recent blog article, The Q Trap, Arthur Hayes, former CEO of BitMEX and probably one of the most interesting crypto writers out there, stated, by the end of the second quarter in June of this year, I believe Bitcoin and Ether will have tested these levels. Bitcoin, 30K, Ether, 2.5K. Well, we're kind of close. Now, that article is well worth a read if you're interested in the macro picture. Tons of detail, tons of insight. And Arthur's general position is that all of these attempts to curb inflation are really just theatrics, that you can't really curb this inflation. It is completely out of control. What matters is to be seen to be attempting to curb it. That's what matters, not to actually do so. Now, the giant trillion-dollar band-aid that got us through the pandemic is now soiled and bloodied and needs to be thrown away.
I am stuck on Band-Aid brand because Band-Aid stuck on me.
Do you remember the Bitcoiners' hedge against inflation narrative? Michael Saylor and Paul Tudor Jones were the big names calling this tune way back last year when the crypto markets exploded. But what are they singing now? Well, according to Fortune, Mr. Saylor is going to be at risk of a margin call if Bitcoin dumps to 21,000. MicroStrategy added $215 million worth of Bitcoin at an average of $44,645 in the first quarter of this year. Their total holdings now, wrap your head around this, 129,218 Bitcoins bought for an average of $30,700. Do you see where the numbers are starting to line up here? Will he buy the dip? Let's see. PTJ himself appeared on CNBC recently to talk about the unprecedented conditions the economy finds itself in and doubled down on his thesis that these are ideal conditions for crypto to thrive, not just in terms of outright financial performance or resilience, but in terms of talent, where the big brains are going. He said it's hard not to want to be long crypto because of the intellectual capital, just the sheer amount of intellectual capital that's going into that space. Yeah? The Fed is likely to announce at least 2 more rate hikes of 50 points this year, which is going to create yet more pressure on markets that have already been pummeled, and it's hard to see what other choice they have.
If you've got inflation greater than 3% on average, your purchasing power declines, cuts in half, in 13 years. It's why I wish we could go back to those halcyon days of sub 2% inflation when you didn't have to worry about the value of your money. You didn't have to worry about what you were doing with regard to pay raises, and you didn't have to worry about a whole pricing and a variety of things that all of a sudden become that much more important in trying to, again, just have a normal business that you have to think about when inflation's 3% and higher, and you don't have to think about when inflation's 2% and under.
So as we're recording this, Bitcoin is still, as you know, traveling downwards like pretty much everything else, bobbing around 33,500 as I'm recording this. But let's be honest, it's likely to get worse before it gets better. So reason number two, the obvious one, the war. It's 9th of May and it's Victory Day in Russia, where Putin has been performing theatrics of his own as they roll out the tanks and the heavy ordnance for a public display of might to celebrate, well, to justify... Okay, look, this is troubled waters, and I have no interest in stoking unnecessary conflict, but suffice it to say, the global picture looks pretty painful as NATO countries attempt to wean themselves off Russian energy. That is going to inflict more prices on, well, the humble consumer, of course. And as forces dig in on the Eastern Front in the Ukraine and the possibility of a rapid end to the conflict fades, it seems increasingly likely that the conflict will last 4 years. Crypto may well end up being the beneficiary of this in the long term, but we are acutely in a risk-off environment right now. And reason number three, obviously, regulation. We've been talking about this since, well, the end of last year, and now really the rubber's hitting the road. Gary Gensler last week announced that the SEC will be expanding its crypto assets and cyber unit to 50 positions from 30. That unit is tasked with enforcing securities laws in all aspects of crypto, so nothing escapes here, not DeFi, not custody, not even NFTs. As they say, the US has the greatest capital markets because investors have faith in them. And as more investors access the crypto markets, it's increasingly important to dedicate more resources to protecting them. Notice that word, faith. How much faith do we have in economies right now? How much faith do we have in fiat currency right now? So reading between the lines here, basically what they consider everything to be is a security, literally everything. And the challenge for anyone wishing to comply with regulations is that, well, there aren't any, at least none which provide any kind of clarity. Securities laws are ancient and they don't really apply in any kind of meaningful or clarified way towards what we know as crypto, DeFi, NFTs, all these things. We're just evolving beyond that. So who knows? So it's tough times indeed for those looking to grow their crypto businesses in a compliant way. But let's be honest, we all knew this was coming. Now, what's been striking about this latest protracted sell-off is the absence of any bad news from China. And I don't want to jinx it, but you know, this has often been the catalyst for wild downturns in the market, but we haven't seen any from out east yet. When China FUD? So what can you do? Now, all the way back in October 2021, which is exactly 1 month before the crypto market stopped, we released a video called "You Are Not Ready for the Bear." And guess what? Most of you probably weren't. But that might be a good place to start. Planning ahead, positioning early is critical in this space, as is getting outside and enjoying real, genuine sunshine. Because the thing is here, the reality's changed so fast. There are plenty of opportunities, and stable coins could be a place you could play. I've been using NFTs as collateral to create capital efficiency for myself, avoiding the need to sell but remaining liquid in the market. And you know, the thing is, you've just got to be really careful about those screaming at you on Twitter to BTFD, buy the fucking dip. Trust me here, you will have plenty of opportunities to make a good judgment about where the floor is in the coming weeks. So take your time, whatever you do. There's no hurry. So stay safe out there, and don't forget to subscribe if you're not. Until tomorrow.